The changes of the trust in the last 6 months would really be the following. Just on the back of the unpredictable events that we've seen since the start of the year, we have addressed areas that would be exposed to commodity price inflation. That has become a bigger problem ever since the invasion of Ukraine. So what we've done is to actually reduce some of our consumer staples exposure, and also a company that is reliant on imported LNG, as we had the view that gas prices would stay higher for longer. And on the conversely, we have added to names that we feel would be defensively positioned, not as exposed, or rather more insulated to these inflationary pressures and also to a potential growth slowdown. So we have increased positions in the likes of Bharti Airtel, that's one of the dominant telco operators in India, as well as Power Grid, a power transmission company in India. We've also included a commodities name, Hindalco, that is an aluminium company. Quite unusual for us, given that we tend to be quite wary of names or businesses that are too cyclical in India. But Hindalco is quite unique in the sense that it is low cost, vertically integrated. So we believe that makes it less vulnerable to swings in commodity prices. And also it's owned by a promoter group that we know and are very familiar with and trust a lot. So those would be some of the key changes. What that means to the portfolio today is that whilst we have reduced consumer staples, it is still an overweight for us. We have kept Hindustan Lever as our core holding there, as we feel that it has pricing power and will be able to protect its margins. Financial services today is the single biggest sector, as well as overweight. And although we had concerns that the growth recovery may not be as smooth, just given some of these macro headwinds, as a sector, the private sector banks have proven themselves to be disciplined in underwriting, so credit cost is not an issue, and they may be sensitive or rather benefit from rate hikes as well. So those will be the two largest positions, along with communication services that has increased because of our addition in Bharti Airtel. The trust performance of late has been challenging. It has been challenging since the start of the pandemic because the market has enjoyed a strong rally since, and we have been relatively defensive, positioned more defensively. If you look at the last 6 months, the trust has fallen 7%, just given the weakness generally, with the equity markets, with Fed tapering and inflation being a big concern. The MSCI India has been more resilient, falling less than 1%. And if you look at the sectors that have done well in the MSCI India, it's really areas that we don't have much exposure to. This would be primarily energy, and we don't hold Reliance Industries. And within utilities, whilst our utility stocks have actually performed well, we don't hold the Adani group of companies in short, I think, the likes of Reliance and Adani group does not meet our investment criteria. And we think there are better ways to make returns, and whilst it's been challenging in the near term, we believe that, the fundamentals will prove itself. And we have already seen that with our companies being able to manage cost inflation. So we hope for better returns to come. The key portfolio changes during the period. First of all, we have added 2 new names in the portfolio, Hindalco, that I've explained earlier, and also Delivery, which is an online logistics provider. These 2 additions have come alongside exiting a number of names in the portfolio. We have tidied up lower conviction holdings within consumer staples, where we felt there would be more inflationary cost pressures, and also the internet IPOs that, we still think that there is a good long-term potential for some of these companies, but the rate-sensitive nature meant that we had to be more careful with valuations and also being more mindful of regulatory pressures. Um, Delivery was something we added, because we felt that it was priced attractively enough, reflecting some of the rate concerns, and also it was more agnostic to regulations. Yeah, and so those would be some examples on top of what I've mentioned earlier. Yes, two holdings in the trust that we find exciting would be Nika, or some people know it as FSN e-commerce. The second would be Renew. So let's talk about Nika first. Nika is essentially the Sephora of India, but it's really a lot more than that. Nika is a young company and has grown very quickly to be one of the dominant players in in the e-commerce world for beauty, followed by personal care, and it's really seen as a trusted partner for many international brands wanting to sell in India. So not just because it has the connectivity with retail customers, but also it provides the logistics and fulfillment services. So a great story there in a market that still has a very long growth runway, and again reflecting the aspirations of the young Indian consumer. The company has rather ambitious growth targets. So it wants to replicate its success in fashion, and it also wants to extend that connectivity to other retailers, primarily the small mom and pop shops in India. So something we find extremely exciting. Second would be Renew, which again, the name speaks for itself. It's a renewables company. It happens to be listed in the US, but it is the second largest operator of solar and wind energy in India. It's got a good track record. It's got a good growth pipeline because the Indian government has aggressive targets to actually shift more into renewable energy. Given that the country has their own net zero targets to achieve as well. So Renew plays a very key role in this energy transition story for India. And as the country develops its ecosystem, we believe there's immense opportunities for the company. The key future themes for the trust. Well, India has always been an attractive market when it comes to domestic consumption. And that's a theme that we have always believed in, and continue to think that it's very, very attractive. And there are many different ways to play it now. It's not just buying into consumer staples companies that we traditionally have, such as Nestle or Unilever, but something like Nika that I had shared about earlier, represents a new growth angle there when it comes to e-commerce. And not to forget, financial services remains an interesting place as consumers upgrade, and want to live well and spend well. So those are interesting ways to play the consumption story in India. Second, India remains a country that really needs infrastructure. And infrastructure, again, can come in many forms. Traditionally, it's construction. So we used to and still hold cement companies for that. The investments into internet, digital, all requires telecommunications backbone, data centers. So again, something like a Bharti would be an interesting way to play into the longer term growth of infrastructure in India. And finally, renewables, is one area that requires a lot of investments. Renewables and manufacturing, which is what the government's really trying to do to attract foreign direct investment. So I think these are really interesting ways or important ways for India to try to generate more jobs, and that would, build a more sustainable growth for the country going forwards. And finally, India's a country full of talent. And it's not just low cost labor, it's talent that actually has strong engineering skills. So IT services, and also healthcare. I think there's a rich pool of engineers and scientists in India. So IT services and healthcare offshoring story remains something that's attractive to us.